Brian.
Good morning, everybody, and welcome to Beat the Bell. Hope that everybody had a phenomenal holiday weekend. Hope that everybody had a good trading day yesterday. Let's finish the year strong. Only a couple days left of trading. And here we are sitting in what would technically be the midst of the Santa rally. But will we get it? Will the market trade higher today? It looks like we are relatively flat headed into the open. We'll just have to wait and see. All right, let's bring on today's panel, who we got with us, starting with Coach Dipka. Coach, good morning.
Good morning, guys. Good morning. Hope everyone had a great holiday. Happy to be here. Let's get after it.
Likewise. All right, Money Mander.
Good morning. Kind of crazy to me, man. Second to last Beat the Bell for 2022. It's pretty amazing how far this has come.
It's definitely flying by. Diamond, good morning.
Good morning, guys. Hope everybody had a very Merry Christmas and a happy holiday. I'm excited to get back after it.
Ramsey Rippers.
Good morning, guys. It's funny what Mander just said. Second to last episode of the year. Let's make it a good one. Crazy to see how far, all of us have come, even the listeners in the last year. A year ago, there was no Beat the Bell. King Cap just getting started. So it's a lot of gratitude moving forward.
Absolutely. And Mo Mamba.
Good morning, guys. Good morning, Hondo. Let's hope we get some better price action today. That's all I want.
Yeah, we'll get into it. Yesterday was very, very slow in the indices. Slow market day all around. Last thing I'll say here, guys, before we get underway, this episode is brought to you by TrendSpider. Any of the charts that you see in today's show are TrendSpider charts. So if you are interested, you can use our link. You can find that in the show notes of the YouTube if you are watching via YouTube, or you could take a screen grab. It's right here on the screen. So be sure to sign up for TrendSpider using our code to get that 25% off. But let's get into it. We'll start with the Fed forecast and economic outlook for this week. And for that, we're going to bring in Money Mander and Diamond Trades. Good morning, fellas.
What's going on, Alejandro? Yep. So let's start with the economic calendar for this week. Shortened week, obviously, no trading on Monday. Yesterday, we didn't really have any economic data coming out, and the rest of the week is going to be pretty light. We had the red book in about 15 minutes. Low impact news shouldn't really affect markets too much. And then we have pending home sales at 10 o'clock. I think that's going to be one of the bigger pieces of data to come in this week. We'll see if the home sales, they were showing a bit of weakness, obviously, last month in terms of new home sales. And so we'll see if pending home sales is sort of showing the same story. Initial jobless claims that we have on Thursday, just that weekly job data. And then on Friday, we've got Chicago PMI coming out at 9:45. So a pretty low impact week. Like I said, pending home sales will probably be the biggest thing to come out this week. So not much on that front. On the business front, we can definitely talk about chips, right? So right now we have a situation where the chip sector, and if you guys trade the chip sector, you know that the price action has been really weak. The MUs, NVIDIAs, AMDs of the world. So we had the pandemic hit, right? Let's set the stage. Pandemic hits, supply chains get shut down, and then consumers get loaded with free cash, right, from the government, from the Fed, from government stimulus, and so we have a crazy demand for chips and chip products like gaming products, PCs, stuff like that. That creates a shortage. Producers start to ramp up that production and really meet that shortage, while an inflation-strained consumer over the past couple of months has begun sort of pulling back on that discretionary spending, creating that huge oversupply, right? And we can see that in the days in inventory level, right? So Ryan, you want to throw up that days in inventory chart? For some of the biggest players in the game, according to UBS, inventory levels are really at their highest in more than a decade, right? So about 40 days above the median for the chip industry as a whole. This is the most severe, really, supply-demand imbalance that we've seen in the chip industry in the last 13 years. And so what's the result of this, right? What do you get? You get chip makers, A, pulling back on CapEx, and B, reducing their workforce as they sort of struggle to meet this profitability, right, with this reduced demand. And that's exactly what we saw in Micron's earnings on Thursday, right? They missed earnings, they gave bad guidance, and they came out and said they're going to cut 10% of their workforce going forward. The NVIDIA CFO stated that they believe the end of Q1 could sort of be that ending for this inventory pressures that they're feeling, but a lot of analysts still feel that is really optimistic, right? So we're gonna have to see how that plays out. We can throw up the stock chart. There we go. Their performance. As you guys can see, you know, the chip sector has just been getting absolutely annihilated, especially over the last month or so. And this really just goes from having going from those supply chain issues right into these now demand issues, where a lot of their customers, right? So the Intels of the world, the people who sell their products, they're just not able to really meet that demand right now with inventory so high. So we're gonna have to see how this plays out going into Q1. I know the chips are somebody's, a lot of people's really favorite name, looking to buy them at a discount. This is definitely something that you would want to pay attention to if you're looking to scoop up some NVIDIA, some AMD at cheaper prices in the future.
Yeah, really great segment. And I've been loving the price action personally because, as you guys know, I've been short in the video. But I just want to do a 30-second segue here because I think the data shown in this is really great. As we've talked about, who's going to be the biggest consumer of the semiconductor chips? It's likely going to be your big tech generals with their computers, their gaming, streaming services, cloud computing. So I think Meta, Amazon, Google, et cetera. Those are the names that come to mind. And they've been getting destroyed on earnings, bringing in way less revenue with way too high or way too low of EPS, right? Too high of expenses. So if you look at the whole calendar year, right, the Fed's had this unprecedented hike in the federal funds rate. So now in turn, treasuries are up and your corporate debt yields now also have to go up. So it's more expensive to raise debt. You're bringing in less money. What's your only option? It's going to be to try and cut expenses however you can. So we've seen that in the massive layoffs with Meta, Amazon, and now obviously with production slows and less usage of the chips there. So I love that segment. I love the data shown there. And I'm just going to push us right into yields real quick before we pass it back to Alejandro. Ryan, if we could do this 30-second recap for me, that'd be great. was 17 of 19 participants saw us ending the next calendar year over 500 basis points. So whether that be 5 to 525 or even higher than that, you could see there was even votes for, it looks like 575 to 600. So only 2 of the 19 participants actually had us ending the year at the terminal rate. The rest foresaw ending 2023 over where bond markets were pricing in we would peak at. All right, fantastic. So now let's look at what the 10-year has done ever since that meeting on this chart here. The reason I wanted to cover this is, as we talked about during the Fed meeting there, right? The bond markets were pricing in a way more dovish Fed than we saw. They actually came in starkly more hawkish than anticipated, with 17 of the 19 members voting for or showing a forecast of ending next year higher than the terminal rate peak we were expecting, right? So not even any type of pullback. They were expecting ending 2023 higher than we expected. Obviously, that's going to signal a risk-off move in the bond market, because if you're not getting clarity, if you're not confident in what the Fed's narrative is going to be moving forward, they said how many times that was where they anticipated the terminal rate being. Now they come in almost 100 basis points over where they were expecting. They clearly don't know exactly what to do. It's a sticky inflation situation. They're taking it month by month on data. And so clearly investors are not ready to get their hands full of bonds yet. So we've seen a 40 basis point hike on the 10-year ever since that meeting in just about 6 trading sessions here. That's all I got. So we can pass it right back to Alejandro here. That'll end our podcast.
Awesome. Thank you, guys. All right, let's talk about yesterday's trading, what we can expect headed into today. So yesterday and Friday, obviously 2 super slow days in the market. We're taking a look at the system here. It's, of course, the 10 and 50 SMA on the 30-minute SPX chart. For those of you that trade the system, who use this as sort of your Bible, yesterday was one of those days where things are just tough. And oftentimes the market will slow down. And what we have to remember is that it's important to use risk management when things like this take place. But it also reminds us of the importance of allowing those winning trades to be big winning trades. If you look at last week and the opportunities we had, going long over the 50 SMA, which was good for about 45 points, going short below the 50 SMA, which is good for about 75 points. Those 2 trades, those are the type of month-making trades where if you really let them play out, you sit back and, you're happy with the gains, and that that's going to, in turn, afford you a few losses as long as you're managing your risk properly. So, again, yesterday, in my opinion, was very difficult to trade just because it was choppy. But not only choppy, the market was just pretty slow. So if you were trading on a larger time frame like I do, the 30-minute chart, things were just, again, slower. But what are we looking for headed into today? Right now, the moving averages are flat, which is our visual representation that there is very little momentum in the market. So we want the market to tell us something. We want it to start to tell us a story. We're flat at the open here. The futures are up only 3 points. So it looks like we're right back in that range from yesterday. So absolutely not rushing into anything at the open. But let's take a look at the hourly chart, which we know is the other piece of the puzzle and very, very important. So we got the bearish cross of the 10 and 50 SMA on the hourly chart. We can see the really strong downtrend since that cross occurred. And what hasn't happened, and what looked yesterday like it had the potential to happen, was a break back over the 50 SMA, but we never got it. So technically speaking, looking at the hourly chart, the market is still in a very clear downtrend. And so in order for things to become bullish, I know everybody wants this Santa rally, we need to see a break over the 50 SMA on the hourly chart. That, to me, would be the biggest signal that the market has the potential to rally into the end of the year if we break over the 50 SMA on the 1-hour chart. For now, it hasn't happened. So if we continue to trade below it, that's obviously bearish. But guys, one thing you have to remember, and one thing you have to be able to recognize, if the market starts to slow down, let's say today we open in a tight range, we try to break the lows, or yesterday's lows, we try to break the highs, and nothing's really going on for, let's say, the first half of the day, that could be an indication that things, again, are going to be slow. This is typically a low volume trading week. So what we don't want to do, if you've been trading the system and you had a really good week last week, is give it all back this week. We want to be smart, but that's my outlook for today. So now I want to send it over to Ramsey Rippers Ramsey, who's got Bet the Bell with us.
All right, let's go, guys. We got a loaded Bet the Bell segment. Second to last episode. We got to make this one good. So, first question of the day, we're going to start it off with the very famous green or red question. Let's see the panel. Who do we got? Money Mander, talk to me.
I'll take slightly green here. I mean, we've been red, I think, ever since the start of the Santa rally. I think the Bulls are going to try and get something going at some point. So I'll take slightly green today.
Alejandro.
Wow, I don't think that I've ever said red and Mander has said green, so this is definitely a first. I'm going to go red. Something to me feels heavy about the market. This is seasonally the most bullish time of the year, and nothing's happening. And the main focus, quite honestly, is Tesla that looks really, really bad, getting some sort of relief pop here in the pre-market. But some of these tech names just feel super, super heavy. I don't know. I think we're gonna be red today.
Yeah, I just got to point out before I go to Mo that that 378 to 380 demand zone he pointed out last week. That thing is clinging. Mo, you got any thoughts?
As long as it's holding, man. I gotta go green. I think we do see a move into the end of the year. But green
Gotcha.
today.
We'll go Dipka as well.
Honestly, expecting pretty brutal action in general, pretty much sideways for the day, but I'm going to go with slightly green here just because of the rally that we saw in Tesla. Now, we'll talk about Tesla in a minute, I believe. Come back to me.
I agree. I like that. Pretty brutal action today, just like that hairdo you're rocking today. No, I'm messing around. It was a good haircut. I like it.
I just got a cut, yeah.
I know. I'm messing with you. All right. Question number 2. Guys, there's no secret. Tesla, all the eyes are on there. We got guys in the Discord just going nuts. Have been shorting Tesla since 160, 50 points ago. And that was like, I think it might have been 5-6 trading sessions ago. Literally 50 points. Stocks down over 75% from all-time highs. Question of the day. Tesla over under 100 by the end of the year. We literally have, what do we got? We got 2 more trading sessions. Over under 100. That's what I want to know. Noah, what do we got?
Where are we right now?
So yesterday, I believe we closed at around 109, 110. I think we're up a little bit this morning at around 112.
110 in the pre-market.
Okay, so 110. We were at 113 very shortly ago, about right when we started this session. So it looks like Tesla's come down.
I would want to. I'm going to say over, and it feels like a lock until you remember that they were like minus 11% like 3 days in a row. So where would that would put them at like 89. So it would be interesting to see what happens. But yeah, I'm gonna go over.
2, 3, 4. Yeah, 5 sessions ago we were trading at 150. Mander,
didn't we just do this? What was the line we previously had?
So we had
120.
That was last week. We had the same question, but it was 120.
So yes,
that sort of paints the picture.
Exactly. Last week it was 120, and about 2.5, 3 weeks ago it was, should we get our toes wet at 150?
I remember that one as well. Yeah, listen, I mean, we only have the rest of this week then, so you got 3 trading sessions left. I think this could easily see like a 4-point down day for the rest of the week, so I'm going to have to take the under.
The under. Let's get Coach Dipka to break the tie for us. I know you've been trading.
Yeah, so
a lot
it's pretty obvious that a ton of people are sitting on that $100 level. I mean, even I've asked myself, is 100 the spot to start dripping in? And I think that what we see so often at this level is you see it break, right, temporarily, but then by the end of the day, it'll close over. I think we dip under 100, but we never close under, and I think that I'll take the over here, but I think that we'll see like 98, 99 where I'll look to start dripping in maybe.
It's so funny that we say this because I remember back in August, maybe it was a little bit later than that, September, November of 2021, our level for Tesla for the big buy where we got to tell our parents to take mortgages was $500 pre-split. And we're approaching like $300 pre-split now. Like it's just absolutely insane. So yeah, I'm really interested.
That was also before the Fed raised rates by 1 million basis points. So we're definitely in a very, very different environment than we thought we'd be in.
No shit, Jack.
All right, big guy.
No, I'm messing around. But all in all, it's when you think about it retrospectively, you know, take away Elon, the people who are running the company, it's an electric vehicle. The company sells electric vehicles, and they were a top 5 company on the S&P 500. It is pretty wild. I don't know if this is some sort of correction or the turmoil with Elon, Twitter. All in all, it's going to be very, very interesting to see how this one plays out. So we'll keep you guys updated on Friday. See how this line plays out. And this is going to lead us into our last question of the day. I want to hear what your guys' worst stocks of 2022 are. I already know what Money Manders is. It's Carvana. He said it 100 times. We don't need to go to him for this one. So let's start with Noah.
Damn. I will go with Upstart. I'm going to go with Upstart. Affirm close second, but I like Upstart as my number one. From not knowing what it did at the beginning of the year to being down like 90%, trailing 12 months, this name is just an absolute dumpster fire. And I think it's one of those names that really like exemplifies the bull market that we had, right? Like seeing a name like that up at $400, day traders on CNBC talking about it. It's one of those hallmarks of that bull run that we just had. And I don't think I'll ever forget a name like that, even if they get delisted.
I agree with you. Small name in such a saturated, competitive market. I honestly see that one. I see that one going to zero. Mo.
I really don't have a specific stock, but I'd probably mention one that I lost money on. Random Root, ROOT, car insurance company. I don't know why, man. I had hope for this company just for at least a move, right? Some sort of pump on this name, but never got it. So that's just based off of my investment as a worst taker. It is ROOT, Root.
Root. Dipka.
Gonna have to go with Meta here. I mean, come on. 35% down on a large cap after an earnings report this year. It was historic. Zuckerberg crying. It's just crazy. Insane year for Meta. Feel bad for the bag holders there. I know I think Dwayne's got some long terms in there. But yeah, going with Zuck here.
Yeah, it's funny you said Meta. Most people got really screwed over on Meta this year, but not Dwayne Capital. The dude basically nailed the bottom, sitting up probably 15, 20% on that trade. We're going right to Dwayne. What's your worst stock?
I'm giving Paul Tudor Jones a run for his money the way I'm managing some of these long-term investments. No, but worst stock of the year, I'm going to go with Wish. I think it's very representative of what the COVID bull run looked like. That thing is an absolute piece of shit. I don't think it's seen a green day in 2 years. I mean, Wish, any of the memes, quite honestly, I apologize if we've got any AMC apes with us this morning, but those have all just been demolished. Tough
I agree.
year.
Wow, what would I go with? I'm going with Piton, Roku, DocuSign.
You pick one.
There's so many names.
Carvana is probably the worst.
Yeah, Carvana definitely.
Yeah.
I saw it. I think this morning there was a post at 98% from peak Carvana.
It's trading at like $4.
Yeah.
Is it really? No,
Yeah.
It's not.
Wow.
Yes,
I
it
did
is.
not
It's
know
insane.
that.
Dude, I didn't even know that. If you would have asked me, I would have said it was in the 30s.
I mean, come on, we can talk about so many. Roblox. What else do we got? We got so many of these crazy hype. Yeah, Affirm is just absolutely absurd. Even still with the Amazon partnership, that was basically why they exploded down like 90%, 95% all time high. Still got that partnership on trading under $10.
Throw Tesla out there.
But that's going to do it for Bet the Bell today. We got one more to close out the year. We'll see you guys on Friday for this segment.
Thank you, Ramsey. All right, we're going to go over to Coach Dipka, who's got Dipka's certified levels of the day.
Yeah, so we're going to pull up the chart here, guys. No real change, obviously, because we've been in such a crap range, but we got these same, 5 levels here. So I'm going to go through them real quick. We have 378, 52 support, 380 is that big spot, which we held yesterday so nicely. That weekly fib from the COVID low to the all-time high, 380, also has shown up multiple times on the daily chart. Also 382 to 381, kind of this, I'm not paying as much attention to those two, but I just want to keep them in mind. That 382 was that 382 to 383 was sort of that high. 381 had some minor bounces like micro levels, but I'm honestly going with 380 as my big support, 378.52 if 380 breaks. And then I'm going with 385.07 and 387.04 as my overhead resistance. We haven't gotten up there yet because the market's been so bearish and choppy, but just gonna, keep my eyes on those two in case we see that Santa rally that has really not come to fruition just yet. But that's going to do it for the levels for today, and we will pass it back to Dwayne Trades here.
Well, thank you, Coach. All right, guys, we're going to start to wrap up the show here with today's top watches. We're going to go around and ask our head traders what it is that they are taking a look at headed into today. A reminder that this part of the show is brought to you by TrendSpider. All the charts that you see are TrendSpider charts. So if you're interested, you could use the link that Ryan will throw up here in a second. To sign up, you'll get that 25% off. But let's get rolling here. We're going to go right back to Coach. Coach does not have a top watch for us today.
Yeah,
Money Mander, what do you got?
Let's see. Am I lagging out here? There we go. I'm going to be watching Google here. So Google is one of my top names to trade. I've been loving this thing. We actually saw a bounce off of double gap fill to the downside, and now it just filled that upside gap off of a gap down. So I'm watching this to roll over, complete that H pattern to low of year here. So I'll be watching this one down to 83.50-ish.
All right. Thank you, Mander. Mo, what do you got?
Good price action by Macy's yesterday. I like trading this name. Nice double top at that 20.6 level and a nice double bottom at that 20.15 level. So really clean price action, easy triggers. I'll be watching this name today.
All right. Awesome. Thank you, Mo. And Ramsey.
No chart for me today, but I am watching the rising wedge on Microsoft and 238.5, that previous support level that we found off of that rising wedge, now trading below it and rejecting. So 238.5 is my big key pivot on Microsoft. If they can reclaim, it's a little bit, that would be a bullish bias to me. Continue to stay under there. I think that there's more downside into that gap fill around 225.
Beautiful. Thank you. Last thing we'll do here, guys, we want to make sure we get you some flow. So we're going to go back to Mo, who's going to close us out with some unusual flow for the day. What do you got, Mo?
All right. So the infamous Tesla. Guess what we got yesterday? Some nice January 20th expiration call flow. So this is set at 100K plus premium to your right hand. You can see the premium right there. Now we'll take a look at the chart. Is this a good area to be buying Tesla? For me, in my opinion, we do have a nice demand region on the weekly time frame. So what you're looking at is a weekly time frame, and you can see that 109 to 110 down to that 95 level. Nice weekly demand, the shaded region to your left, that is. Nice weekly demand. So if I was shorting Tesla, right, on this drop, I've been shorting Tesla every day or swinging Tesla every day, this would be a bad time to begin or continue shorting Tesla. In my opinion, we are approaching some daily demand, and price action is telling us we are about to get a bounce on Tesla. So it is interesting. I know Kathy Woods grabbed some Tesla shares. That was news yesterday, so that's probably why we had this little gap up on Tesla today. But we'll see how that plays out. Usually doesn't play out good for her. Maybe she's trading off price action this time around. Let's see.
Yeah, I was going to say she's been buying all year long. She's definitely in trouble. All right, guys, that's going to wrap up today's show. Thanks, Mo. Appreciate everybody who joined us. If you're watching on YouTube, if you guys don't mind subscribing and liking, that helps us out a ton. And for everybody who's unaware, we have the 6 of us plus Stock Sniper who trade all day long in the Kane Capital Discord. You guys can go to kane-capital.com to start trading with us. Hope that you guys have an awesome trading day. Let's finish the year strong, and we will see you all back here on Friday morning at 8:30 a.m. Eastern Time.